All right, guys. Welcome to our today's episode. Today we'll be talking about what technical analysis. All right. In our previous class, we discussed about fundamental analysis, and I told you guys that today we'll be talking about what technical analysis. Now, still on crypto trading, there's something called what technical analysis. When you hear the word technical analysis, what comes to your mind? Technical analysis simply means the calculations, the strategy, the reasoning, things you do, and then after you finish doing those things, you now come up with what? A decision to say, okay, I am ready to do what? To buy this coin, or I am ready to do what? Sell this coin. So that calculation, that reasoning, that strategy, all those things are what we call what? Technical analysis. All right? That is when it comes to what? Future trading. Future what? Trading. Remember, when we are talking about spot trading, you use what? Fundamental analysis. But in this case, future trading, you use what? Technical analysis. It has to do with what? Calculation. You have to reason. It is very technical. It's not something you can just jump in and out. All right? You have to have an edge. You have to understand the structure. You have to have a strategy. You have to know your plans. After you finish doing all of this, you now come up with what? Your conclusion. I say, okay, now I am ready to do what? To buy. Let's go in. All right? That is what? Technical analysis. Now, before we finish, when you talk about technical analysis, there are things you have to put in mind. There are things you should know. And then we have this. This is what? Market structure. When you're talking about technical analysis, you have to what? Understand market structure. After market structure, you go straight to what? Demand and supply zones. After demand and supply zones, you talk about order block and fair value gaps. After order block and fair value gaps, you talk about what? Liquidity and inducement. Alright, these are just things you need to know when doing what? Your technical analysis. So for today's class, we cannot be able to finish all of this. I just want to take you guys one after the other. So we'll be talking about what? Market structure. Alright, we'll be talking about market structure in today's class, and then in our next class we can go down to what? Demand and supply, order block, fair value gap, liquidity and inducement, one after the other. So just stay with me and let's go. All right, now market structure. What is market structure? When you talk about market structure, what comes into your mind? Now, I've been learning market structure for about 2 years now. Market structure, I think this is the major thing you need to know. There is nothing more than market structure. If you don't know the direction of the market, then if I just stay out of the trade. So market structure, it is the most important thing. I have a friend that always say that market structure is the king. Market structure is the king. Just know the direction of the market. Now, in market structure is simply the movement. We call it you can say zigzag movement. In your chart, if you go to your trading view or your Bybit, your chart, you can see the movement of the chart like this, moving like this. Yes. So this kind of movement is what we call market structure. Okay? Some persons can say it is zigzag movement. Some persons can say it is eclipse movement. Some people can say it is generational movement. These things, people have so many names that they call it. Okay, they call it so many names, so you should not be confused with the names at all. Tomorrow I can even come and say this is my movement, but the idea here is just in the chart. When you open the chart, you see some kind of zigzag movement. That kind of movement, that movement is what? Market structure. Market structure is how markets move, how it moves. All right, market can be going to the north, but it will not go straight boom to the north. No, there is a way it moves. Market always, it moves forward. When it moves straight, it stop, it reverse a bit, it continue again, it reverse a bit. It's just moving like snake. Like snake. It doesn't go straight to the point. For example, market want to come here. Currently market is here. So why can't market just go straight boom to this point? No, it will not do that. Instead, see what it will do. It will start doing this kind of movement. You see it now. Zigzag movement. But while it is doing the zigzag movement, we are heading somewhere. We are going up. You see it. So don't let those things you see on the chart confuse you. When we talk about market structure is simply the way market moves. Okay, simply the way market moves. So where is it moving to? We don't know. Is it going up, or is it going down, or is it just consolidating? That brings us to what is known as what types of market structures. Types of market structure. Now we have known how market move in a zigzag direction. It doesn't move straight, it moves in a zigzag like this. I just explained just now, like this. It's like moving like this, but heading somewhere. It doesn't move what straight. So that is what market structure. That is how it moves. Then types of market structure, we have what we call the bullish market. Now when it comes to the bullish market simply means a market that is buying. When I mean buying, we mean a market that is going higher. Let me further break it down. A market that is what going up. Now, for instance, I'm going here, and right now I am here. You see the movement now. Now this movement, just like step. When you see this movement, what does it tell you? It means that market is breaking structure. It broke first structure, it broke second structure, it broke third structure, it broke fourth, it broke fifth. As it's moving in this zigzag direction, it is what going up. For example, if the price here is 10 naira, by the time it finishes going up to this place might be what 100 naira. You see that from 10 naira to 100 naira means price has risen. Price from 10 naira it moved what to 100 naira. It is bullish. There are different words for it. There's something called trend line. You can use trend line to see or ascertain if the chart is actually bullish or it is bearish. Now some persons can draw trend line like this. Just join these lows. You see that? So the arrow tells you that what this market is what bullish. It is going up. You need to use your eyes to see and check. The market is what going up. So in this kind of scenario, that is what we call what a bullish market. A bullish market. Okay. When we use the word bullish, this bullish was from the animal bull. That animal, anytime you see that animal, is always facing up with his horn, big horn. It's always what facing up. Even if he's fighting, it's normally it uses his horn to carry any prey and then throw it up. Always think everything is thinking is up, up, up. That animal bull. So from that bull we get the word bullish, and we'll say what market. So it's just a market that is trending what higher. That is trending higher. This is high. This is higher high, higher high, higher high, higher high, higher high, going up, going higher. That is what simply what a bullish market. All right. Now remember, market on its own, the structure is in a zigzag form or just in this kind of form. Even if it's going up, it always like to go in this format. It doesn't go straight. It will go up, go down, up, down, and then. But you see that the direction is what up, bullish. So that is that about what bullish market. That is the first one. Then the second one, bearish. Bearish is simply the opposite of bullish. Okay, it's simply what the opposite of what bullish market. Now let me just quickly draw it. Now when we say the market is bearish, from this region market wants to come to this place. This is what 100 naira and this is what 10 naira price. Now market is coming from here. You see it now. The market is what you can see. What market is what breaking structure to the downside. Let us assume that the movement started from this point. You see now, in the other case, this is almost the same structure, but in the first case, the movement started from here. But in this case, the movement is starting from here. So when you join it like this, you see what your arrow down. Okay? Now, some persons can say, let me just draw the two so you don't get confused. Let me draw another one. I want to have bullish here and bearish also here. Let's say bullish, breaking to the upside, breaking to the upside. This is bullish. We see market breaking to the upside, and then we use the arrow to notify it. Then bearish, breaking to the downside. Yes, breaking to the downside. You see it breaking structure to the downside, break to the downside like this, and then we can use this arrow to say, okay, this is it. Now, do you get it now? This is what bullish direction and this is what bearish. When it is what coming down, when the market is going down, and we use the word bearish because of the animal called bear. When you see bear moving, bear is always what facing down. It's always thinking down. Everything is thinking is down. Everything is down. Everything is down. See, this guy is bearish. Everything is down. That is why we use that as a scenario to say, okay, this market is what? A bearish market. A market that is always facing down. A market that is going down. It's just like, how do we call it? Is it inflation and deflation? You know, when something keeps going up at a point, it starts coming down. So these things happen. The price of goods can rise to a certain point, and then when you get to a point, you see it falling down straight. That time the price was going high, it is what bullish session. The price is bullish. And then at a point, maybe it hits a resistance level, and then it starts what? Coming down. That point where it is coming down, it becomes what? Bearish. So that is just what the two movements. And then the last one, we have what? Consolidation, or some persons say it is ranging market. Ranging market is a market that is either going up or going down. We don't know the direction. Some persons can call it sideways. It's just ranging. Like let me give you an example. Like this, you see market like this. Now you see the line. This is straight, and this is straight. We don't know where. It's just like a parallel. You understand? This one is what? Ranging market. Ranging. This one is what? Bullish. Okay? And this is what? Bearish. So this is the three types of market structure. Alright? This is the three types of what? Market structure. Remember, market structure simply means how markets move. And I told you, market does not move in a straight line. Market move in a zigzag position, in a zigzag way. It doesn't go straight, just like snake. Maybe, you know, I don't know if some snake goes straight, but in most cases I've seen snake that goes like this. You understand the kind of movement? So that is how market does. Market go up, down, go up, down, go up, down. But it's heading somewhere. It's going up, but it like going up. It comes down a little, it retraces. It goes up again. It comes down a little, it retraces. It goes up again. So when you actually check the movement, it is what? Going up, but in a zigzag direction. You get it now? So that is what? Market structure. So what is important? You have to understand when market has broken what? Structure to the upside. Break structure. When we say break of structure, we simply means this market is a bullish market. So market goes down and then retrace, goes up. Break this high. This is the previous high. Now after this next high, it retraces, it comes back to a certain level and then continue the movement to break the next high. After reaching this higher high again, it comes down a little, get to a certain point, go up and break what? This high again. So this breaking of each high is what we call break of structure. So this point, this place, this area is what we call break of structure. The same thing is applicable in a bearish market, and then in a ranging market you cannot even mark break of structure again, because the market has no direction. It's just it's just a linear market. It's like straight. It's straight. You know, in using arrow now, we cannot say this is bullish, this is bearish, and then straight is what's ranging. So we don't usually trade a ranging market. We allow the market direction to be very clear, because the ranging market, anything can happen. We are not sure if it is buyers that are, you know, moving the market, or if it is seller. It is still in a negotiation stage. You know, the market is negotiation, is you know, making plans, knowing where to go, if I should go up or if I should go down. They don't really know yet. So anything ranging, we stay out of the market yet. We like to trade a clear direction. All right, we like to trade what? A clear direction. So we that trade, we are trading what? Bullish market and what? Bearish market. We like to avoid ranging market because we don't know the direction. Okay, so but this is the three type of market structure that we have. I think that is that for today's class. I don't want to keep you guys so much. Tomorrow we'll continue on the next topic, and then by the time we finish, please you guys stay active with me, because by the time we finish all of this one after the other, and then we'll start putting them together, it will start making sense to you. That is when you understand what market structure and how to analyze a chart. We are not yet in the chart. This is just a theory class, just to help you understand market structure. And after that, we can move on to what risk management is very important, and then talk about psychology. All right, so for now we are still on technical analysis, and this is a very big topic. So I will try my possible best to break it down one after the other. Today we'll just finish with what market structure, understanding how markets move, and then I just told you that we have bullish market, bearish, and ranging market. Market does not move in a straight line. Market move in a zigzag way. Some persons call it Elliott wave. Some persons can call it any grammar. Grammar is not my problem. Just understand that market does not go straight to the point. It always like to branch somewhere. You understand? You know, make small gossip, continue the movement, branch somewhere again, go back. But there is a direction, there is where it's heading to. You understand? So that is what that about market structure. So if you have any question, please do where to put the question on the comment section. I always check my comments and I respond to questions, all right, concerning what market structure and technical analysis. Thank you very much for watching to this point. Please do well to subscribe. Why I'm asking you to subscribe is so that you can turn on your notification bell. When you turn the notification bell, you stay active. Whenever I upload content like this, you get notification and you go there and watch it. It will help you to build your trading journey. Thank you very much, and God bless you. Have a nice day. I love you. Yeah.